All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live for New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, quick sound check. Drop me a one in the chat. Let me know that you're all ready to go for this morning's session. All right. So as always, we want to make sure that in the Forex trade room that we start off each and every morning with a strong foundation, making sure that we're taking massive action, meaning that we are accepting all possible losses before entering a trade, preparing for any outcome. We want to make sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading, and that we continue to trust in our education, strategy, trading skills, and intuition. We always want to imagine our trade successfully materializing. We want to make sure that we obey our trading strategy, avoiding decisions based on greed or fear. And we want to make sure that we are never looking back or stopping once our trade has commenced, right? So I hope everybody is having a wonderful week so far, taking a look at all the back and forth that's going on in the market. Yesterday, we'll switch over to the dollar here and take a look at the DXY. So yesterday, the big news was the Federal Reserve meeting and the press conference. So we could see as a result, the dollar index hovered around 103.4 on Thursday, near a 5-month low after the Federal Reserve held rates steady, but reaffirmed its outlook for 2 interest rate cuts this year. Officials said they do see another half percentage point of rate reductions through 2025, despite uncertainties around President Donald Trump's policies on trade, taxes, and deregulation. The central bank also lowered its U.S. growth forecast while raising its inflation outlook. However, Fed Chair Jerome Powell downplayed concerns over tariffs, calling their impact on inflation as likely short-lived or transitory. Okay. Markets are now aligning with the Fed's projections, pricing in 2 rate cuts this year, with the first expected in June or July. Investors are also awaiting weekly jobless claims data on Thursday for further labor market insights, right? So held rates yesterday. The market overall, like, kind of took its tone is fairly dovish, but again, downplaying concerns over tariffs. Saying that the impact on inflation is likely short-lived or transitory, right? So we saw a bit of a rally in the markets yesterday. As a result, the question is, how long does it sustain, right? How long does that rally sustain itself moving forward? Is it going to be for a couple of weeks? Is it going to be longer term? Uh, is the correction over? That's the question, right? From a lot of market participants in regards to like the S&P, the Dow, and things like that. But we'll see. We'll see how it goes. But it caused a bit of a U-turn in the markets yesterday. Again, we'll see if it's sustainable. So we know that if you read the week ahead information that we send out, we know it's a big week, right? As we've got not only the United States yesterday in the FOMC rate decision, we also have um, the Bank of England today expected to keep rates steady, but to take more of a hawkish tone is what some market participants are anticipating, especially since we see that UK wages continue to rise sharply. So regular pay in the UK, excluding bonuses, increased by 5.9% year over year in the 3 months to January 2025, holding steady for the second straight month. And in line with the consensus, it remained the strongest rise since 3 months to April 2024. Um, Meanwhile, the UK jobless rate held at 4.4% during the period, matching forecast and staying at its highest since the 3 months ending in May 2024. So they are expected to keep rates steady. Swedish Riksbank holds rates at 2.25%. The S&B, um, the S&B, right, cut its policy rate 25 basis points uh, to 0.25% in March 2025, the lowest since September 2022, is expected amid low inflation, economic uncertainty. It marks the central bank's fifth cut in the current cycle. Inflation has declined from 0.7% in November to 0.3% in February, mainly due to lower electricity prices. Though domestic services continue to drive price growth, the S&B's inflation forecast remains stable, projecting 0.4% for 2025 and 0.8% for both 2026 and 27. Assuming the rate stays at 0.25%, Switzerland's economy grew steadily in late 2024, supported by services and parts of manufacturing. Though unemployment edged higher, the S&P expects GDP growth of 1% to 1.5% in 2025, driven by higher real wages and easier monetary policy. Though weak global demand could weigh on trade, growth is forecast 1.5% in 2026, but uncertainties remain with geopolitical and trade risk posing potential threats, right? So we got a cut there. So again, like I said, a big week for central uh, for central banks. Australia, the jobless rate stays at a 3-month high in Australia, stood at 4.1%, and German producer prices rise less than expected, right? When we switch over, taking a look at gold, hovered around 3,050, right? So when we think about that de-extension target that we had laid out uh, on the daily, right? On our daily chart that we've been following for gold, we are spot on, right? Spot on, closing in on that extension. So a fresh record supported by rising U.S. rate cut expectations and strong safe haven demand. The Federal Reserve noted increased economic uncertainty, but still expects to cut rates by 50 basis points this year. We just talked about that. Matching its December projection and boosting non-yielding gold, right? So we talked about that all last year where we rode gold to 2,600 in 2024 because we were coming out of the previous year with an expectation of rate cuts, right? And we know that gold typically benefits when you see rate cuts, all right? So, and it continues to benefit. Meanwhile, tensions in the Middle East escalated as Israel launched targeted ground activities in Gaza, retaking part of a key area after an airstrike ended a 2-month ceasefire with Hamas. The U.S. also kept striking Houthi targets in Yemen after Red Sea attacks, with Trump vowing to hold Iran accountable for future incidents. At the same time, worries over global trade disputes persisted as new duties are set to take effect in April, following the U.S.'s 25% tariff on steel and aluminum enacted in February. All right, so that is the news. It is a lot of it. Again, Powell took sort of a dovish tone yesterday. The markets, at least in the short term, like what he had to say in regards to tariffs being seen as transitory, right? We've heard that before, though. That transitory word with inflation, but the markets rallied a bit as a result. If we come over and we take a look at what I want to look at, take a look at the spiders, the ETFs, you can see, right? Again, the spiders tracking the S&P 500, giving you the complete breakdown of all sectors. You can see, right, it had a pretty good performance yesterday, right? So you can see consumer staples pretty much broke even, but we saw gains in just about every area, right? Of the S&P. Like I said, the question is, can it sustain itself, right? As a result, how long does that momentum last? Considering right some of the headwinds that we are facing. So we had a pretty good gain in industrials, technology 1.3%, 1.63% in And energy almost 2%, and consumer discretionary communication services up over 1%, financials. So, yep, look pretty good there. Any questions, thoughts, comments on any of the fundamentals? No?
Okay.
Hey, Yasina, how are you?
I'm good, thank you. Good to
Good,
hear.
good, good. Yeah, absolutely. Absolutely. So glad you're here. So let's take a look at the DXY, right? So we can see that we started to study a bit, right? But that's really, really kind of range bound. We'll see what happened as today, Forex Factory Thursday. So we covered that already. Um, we got what we got coming up for the Bank of England. We've got, here we go, U.S. unemployment claims at 8:30. Right. U.S. unemployment claims at 8:30. We got the Philly Fed manufacturing index. So those are things that can move the market today for the U.S. dollar. So maybe we'll see if we push back up to that 103.90 94 level where we've seen to struggle, but a bit range bound when we move down to the lower time frames. Uh, get a closer look at where, how that range is playing out. Okay, so not quite in the 80-20 zone, but it's trying to make a U-turn, but that's a range, right? So we need to break out either way on the dollar. That's that. Switch it over. Take a look at we'll start out in our commodities, right? Just to tap in quickly. We can see oil, right? Still struggling, right? Still struggling. If we come down, see it from the higher time frame, right? Clear range. We'll come down to the 4. We were trying to see if we could make some gains, still within this little AB boundary here that we had drawn up. But you can see for the most part, uh, if you take this off, right there, we're just kind of trapped, right? We've got a larger 4 hour 80-20 there, but it's struggling, right? But we know when we have those 80-20 type scenarios that we often see it range for a while, right? So nothing really doing there. But we know the talk of the town, right, is that goal 3055 is that target. And we can see, right, did we end up hitting that? Yes. Looks like we did. 3057. So that extension has actually been hit, right? I was looking at it from that report off Trade Economics, but we actually hit that high, right, at 3057. So that is mission accomplished. We hit the 3000, then we actually hit the D extension. So congratulations, right? If you took gold for that ride all the way up to 3,000 and beyond, that the extension is hit. So we'll see, if we see any sort of correction, what data coming out in the near future could trigger, a correction in gold. But although we may see a temporary correction, right? I'm thinking mainly from, hey, maybe some profit taking, right? As prices have hit an all-time high. We see some profit taking take place, but definitely could see gold moving higher, right, in the future, considering the economic conditions, right? What's going on globally, right? The concerns, right, with risk. Silver, we hit an extension. Now we're turning over on the 4, right? So we hit the previous D extension, new AB boundary. We're turning over on the 4 hour. Didn't hit, my 80-20 zone. So we'll just wait for a low price, right, on silver. See how far it wants to track and to see if we can get it to move into our buy zone, and then hey, check the conditions at the time that it reaches our buy zone and see if we want to continue to take the ride long on silver. Any questions there regarding silver?
Yeah.
Nope. All right. All right, so that's where we are on silver. Uh, hey, we've started to track copper, right? And we've got price coming back down into our 80-20 zone there, right? So beautiful ABCD wave here. Okay. Simple trading, right? There's our D. Look, our C becomes our new A, our D becomes our new B, and we play the game all over again. Now, this is a 1 hour that we're tracking. We did not get a 382 retracement prior to the B boundary being broken, right? So we didn't get one of these, right away. We broke that B boundary and we pushed higher. We know that there's always a chance that that price can come back down. Okay. So as we move, right, we're above the cloud. Makes sense, right? Nice impulsive move. Do we see a deeper correction uh, on copper, right? Do we get back below this 50? Do we break the cloud and move lower? That's a possibility because we know we haven't had a deep retracement. So this is one to keep an eye on, right? So if you're trading like your lower time frames, things of that nature, if we say, hey, I like the possibility of a further correction, right, on copper, a sell-off, then I start to map that out, right? I know price is coming back down in my zone. If I trade the lower time frames, then maybe now I'm looking for a pullback, right? We've got this nice move down. Do we see a pullback and a continuation? Do I see that happening? Okay. The copper has had a lot of momentum, right? So if I'm trading it, a 15-minute, right? See how we got that break on that cloud on the 15, right? So that's what I'm looking for, right? Do we pull back over here and then continue down, right? So when we get short, you know, towards that target. So okay, that would be that 1 hour 382. Do we stay short? Okay, so if I'm looking for a tighter entry, lower time frame, can I get that pullback and then that continuation down, right? That can get you into uh that could get you into that position there. Okay, so that's where we are on copper, right? See if we can continue the correction. Of course, nat gas kind of still just trying to figure itself out, hadn't done too much, right? But it's been a good ride, right, with nat gas. So just have to continue to be patient to see what it wants to do. We'll continue to track the fundamentals on that. Let's dive into the some of our indices and see where we are. So this is where we ended up on the S&P yesterday, right? So definitely we're on this daily chart. Okay, stochastic still moving up. And so kind of moving sideways right now, but we definitely put in a lot. So again, like we talked about this morning on the fundamental side, after the FOMC meeting yesterday, is that going to provide enough momentum for the market to start to rally back the uh, to the upside? Okay, have we made a deep enough correction, or are we gonna, you know, form this lower high and continue down? Right, sub call. It's gonna be interesting to see the market open today. Got some more U.S. data coming out, but we definitely have put in a swing low here in our buy zone. Okay, so can we see sustained momentum to the upside? That's the question there, right? That's the question. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Oh man, doing pretty good, man. Um, right off the top of your head, any thoughts fundamentally regarding what happened yesterday with the FOMC, or anything like that?
No, he was dovish, right? He didn't. What was
Yep.
interesting is he, kind of downplayed the tariff situation, saying that it was basically saying it's transitory. So there's that word again.
Yep.
Um, so that part I'm curious to see because when he uses that word, generally over time it comes out to not to be that way. Um, so I'm curious to see how that tone changes over time. Um, but that was my outside of which part I covered. That was my big interesting moment from from that conference.
Yeah, yeah, I definitely align with you on that one. Definitely align with you using that word transitory. We'll see. We'll see what happens. You know, um, I would love to see the market rally from here,
Right.
but we'll see. We'll see what happens. Yeah, he to me he straddled it pretty good yesterday. You know,
Yeah.
he straddled it pretty good. Like I say, that the markets performed well afterwards. I guess they're looking for any semblance of clarity amidst all the chaos right now.
Exactly.
You know, so we know that the Fed's word has influence, and so I think it kind of got them out and beyond, all the chaos from the tariffs and everything else. So it's like, okay, some sanity here.
Right.
So I think that's what gave it a boost, but we'll see if it can continue and sustain this momentum to the upside. I was listening to Bloomberg Daybreak Europe this morning, and one of the investors was saying that he think it'll cause a rally for at least a couple weeks. It's like, wow, you
Mm,
know, yeah, a couple weeks. So I'm interested to see if that plays out. That's what his company was projecting. So
okay.
we'll see. We got a low. That's a sideways movement there. But we'll see which way it wants to break out. But
Yeah.
I'm a believer that eventually it'll move back up. Just use your risk management, and trade accordingly. But the risk management is the key here. If you're dripping positions in, doing the correction, right? Make sure that it's within your risk protocols because it could push lower,
Yep.
right? It could push lower, but as long as it doesn't take out that A, right, it has no choice but to go our way. So we'll see what happens, right?
Yes, sir. Exactly.
Yep. Appreciate you, man. Thank you.
No doubt. Appreciate you.
hmm All right. So here we are. Same thing on the US 30, right? We put in a low here on the daily. Okay. So if that's your play, hey, I'm gonna drip a small position in. Then if we came down to the 61.8. Then hey, as long as your risk management is good, as long as that eventually turns around, uh, you know, you'll be good. You'll be good in the long run, right? I'm way over and past trying to constantly time the market, right? Reading the fundamental data, so we knew that the market was due for a healthy correction. And so we're looking somewhere within, as simple as this, right? Somewhere in this AV boundary, we're looking for this market to settle down and eventually U-turn, right? So it can do all the correcting that it wants to do within this AB boundary. If it U-turns, I'll eventually be in profit and we'll be making that money, whether that's over the next few weeks, over the next few months, doesn't matter. Doesn't matter to me, right? Doesn't matter to me. Here, right? We had in our previous fib, what was this? August. Correction came in August, right? We're getting a correction now in March. This correction came in August, right? Can we predict that? No. Right? No. Can we exactly time that? No. But what I do know is that as long as I'm within this AB boundary, and fundamentally, my case is still long-term bullish on a particular asset, right? When I've got this up AP boundary, if my long-term, forecast is bullish, then I'm looking for it to U-turn somewhere in this zone. And I know that if I'm not over leveraged, I can sustain any correction, right? So of course we like our 61.8s. We like it to be in our buy zone here. But if we get a lower correction, I can sustain it, right? And maintain my sanity if I'm using proper risk management. Does that make sense to everybody? Yes or no? I want to make sure we're clear on that.
Yes, sir.
Okay. Right? I want to make sure we're clear on that. Okay, so I'm not gonna lose my mind if we correct lower, right? Because I don't lose this trade, right? I don't lose this trade idea, right? Unless that A is taken out. It's as simple as that. It's as simple as that. Once I get a strike in my buy zone and I start dripping positions in, I don't lose that, right? Unless my A is taken out. And guess what the beautiful thing is? I already know what I'm losing or what I could lose. I already know it. I already know it. I already know I'm on the hook for 1 or 2%, 2.5%, 3%. I already know that. So I'm gonna allow, right, for the market to play itself out. To play itself out. I'm gonna block out all the noise, right? I'm gonna block out all the noise, and I'm gonna let my idea play out. Look at the rally that we had off of this level, right? Look at that. Okay. So now, right, we've had a healthy correction. Maybe it takes off from there. Maybe we get another drive down. Doesn't make me any difference. The math is already figured out. Okay. So hope that makes sense. Here was your last. Look at this correction here. Right. The sky was falling for a lot of people. Right. Look at that correction that occurred in the market. Okay. Here. Okay. So not concerned about this, right? This is why we have rules. Okay. So why this was here, right? This rally here, not concerned about it. Why is Billy not concerned about it? Because I'm not in the trade at that point anyway. That's why rules are important, right? But I will be in this trade here. Okay? My rules will put me in this trade here. Now we got a nice U-turn. Okay. But the rally couldn't sustain itself. That's okay, because we potentially have another position here. Take it off this 382 level, even though, right, the beautiful thing is this. Even if you put a position in here and your risk management was stellar, right, would you have eventually made money? Yes or no?
Yes.
Yes. Right? Yes. Yes. Depending on where you're just playing that stop off that 382, right? But yes, technically, if you could sustain it, right, you would have made money. Right? Where we lose our mind is when we're over leveraged. Right? And we can't sustain the drawdown. But you'd eventually make money. But if your rules don't put you in until this 61.8, right? We talk about the 61.8, 50% with some structure, right? Like if you look back and you got past resistance becoming future support, right? You got some things lining up for you, some additional confirmations on that 50% level, then great. But if you didn't look at my 61.8, I took it. Yes, I suffered some drawdown. Okay. My 786 level is what we like to trade. Boom. If I had my A, right? My stop loss is below my A, we U-turn. Okay. So I'm not concerned about making money today or tomorrow, right? I just want to ultimately get it right as many times as I can. But if I don't, I have stop loss protections in, right? I have my stop loss protections in. Or if you got an investment portfolio, you have your defensive assets built in there. Whereas when you're more aggressive, the more aggressive assets that you trade, the riskier assets that you trade are not performing well, you've got your more conservative defensive assets like gold, like bonds, things like that that are kicking into play, kicking into overdrive at that point, and performing well until those riskier assets make the U-turn, right? So different ways to manage your risk. But in this particular case that we're talking about, right, it's not taking out my A, so I'm running, right? And so, people say, well, how can you stay? Number in the trade, number one, risk. Number two, right, past history, right? If it doesn't take my A out, I'm looking for this to eventually rally. If I'm wrong, I already know what I'm risking before. So it's no shock. Like if a trade gets stopped out, there can't be any shock if you knew what you could lose before you even took the trade. But surprisingly, a lot of people don't do it. They don't do it. They don't calculate your risk. So it can float, right? It can retrace 86% if it wants to. As long as that A doesn't get taken out, we're gonna look for at some point for that market to rally. Right? We're gonna look for that market to rally. And if it doesn't, on to the next one. Right? On to the next one. So here's your NAS, right? We were running these to the downside, seeing if we were going to locate any 80/20s within the zone. But we didn't get it. But again, right? So this one, look at this one, how this one has retraced, right? So on your NASDAQ, right? If I've got an order in on my 61.8, same concept, different asset, doesn't matter, right? My 61A here, boom. If I've got my second position in mapped out, right? So you can say a half percent, 1%, total of 2%. Right? Then I'm in here. If okay, right back around break even, right? A little bit below off this last candle, a little below break even, right? On that 61A. We're actually in profit on that 786 order, right? Do we rally from here? If not, eventually it's gonna make its mind up on what it wants to do. Can't worry about the rest of it. That's why we say, hey, once you get it, you got it, and the concept becomes really simple. Same thing applies if you're trading on a 1 hour chart. Okay, if you're trading on a 1 hour chart, a 15-minute chart, 4 hour chart, it's the same concept, right? Of course, on your lower time frames, you're gonna have more fib cycles, right? More times you're getting you'll see the stop loss hit more frequently than you would on a daily because it's just a larger play on the daily, but the math and the numbers will work out, pretty much the same if you're sticking to your rules, right? Look at this correction here, this pullback, right? Go back in time and read some, go back, in August 2024 and read some of your articles that you were seeing, right? Some of your doomsday scenarios. And then here comes the rally. Right? So I have to continue to roll with that idea, continue to roll with this framework. Right? So it's an aspect, like we are where we are. Right? If you're looking at this at the daily, you can see how our candles are, right? Kind of sideways. So that tells you in your lower time frame, that not a whole lot, right? Unless you're trading within that candle in your 5 minute. you're taking smaller like short positions and things like that. But if you're swinging, set your orders at your levels and let it go. Okay, so that's where we are. Here we are, right on the Nikkei, right? So just bouncing around, right? We had a close to a 50% retracement a long time ago, right? I haven't quite gotten there yet. We are over, right? Overbought here with our stochastic. Can we get another push down? Quite possibly, right? We ranged for a while, then we broke down. But that's a possibility, right? As we're trying to eventually form possibly a swing high here, right? But there's been a lot of back and forth with this setup. Okay. So not too much doing. If you're in a position there, you're saying, hey, I like this long, over the long run, right? They continue to ride your position out, right? Your risk is already calculated. That's the key, right? Here we are, your German 30, right? We can see a correction. I'm not buying from here. It keeps it simple for me, right? If I'm playing this daily chart, I'm not buying this, right? I'm not long off the 236. I'm not. So if we eventually, right, and this is strictly looking at the daily chart for the sake of time, right? If we eventually get a correction down into my buy zone, then I'll look to play it. Until then, nothing's gonna happen. Right? Nothing's gonna happen. If we push up, right, into our 80-20 zone, have we had a 382 correction? No. So if it pushes up into my 80-20 zone, then I might look to short that correction on the counter trend move. Simple as that. Simple as that. Okay. And this is just focusing on one chart, right? Here's our rally here. We didn't get a deep correction. So if I'm trading my daily chart and these rules weren't met, right, to where I got it into my buy zone, then that rally we missed. This play here, right? Look at, here's our AB boundary. We got a 50%. Look how it rallied and then it pushed deeper, right? Bingo. Rally. Okay. So things we look for. So right now on this German 30, we're in an up retracement zone. Okay, on this daily chart. We want to see prices correct. Okay, and then look at our Russell. All right, this is our daily chart. So you can see similar price action. Right, S&P, US 30, NASDAQ, right? We formed that low. That right there. Somebody tell me what technical pattern that is.
Double bottom.
Double bottom. Right? Can it sustain itself? Are we going to continue to make higher highs and higher lows from here, right? Is that pattern going to hold up? Right? That's up against a monthly level there in black at that 1981, right? 786 retracement. We expect a 1.27 extension eventually, right? Okay. Now, if you plan this on the lower time frames, we got a deep retracement on the daily. So if you want to zoom in and watch this price action a little closer, just take it off that leg, right? The second leg of the double bottom. Go down to your 1 hour here. Okay. You see, we clearly, right? If I drew my trend lines, we can see we clearly have, right? We clearly have our trend line break. If we work our way down, okay, we've got our trend line break. Now it's okay. If I'm playing my Fibonacci levels, where's my opportunity? Same thing. We're down on the 1 hour, right? Current fib, did it hit my buy zone? Yes.
Yes.
Now yep. See how we flow?
Mm.
Right? Same thing. Nothing changes. Only thing that changed here is the time frame. Okay. So based on this 61.8 pullback, my shorter term move is here. Okay. There. Can we continue our rally and hit that extension? So if you say, hey, I trade the 1 hour chart, this is your move. We do the exact same thing over and over again. There's no, oh, the market conditions are such, so we use these 8 other strategies. Where we completely change any indicators we use, we completely change them. That's not what we do here. Right? That's not what we do. So that's the Russell. Okay. Any questions over any of the indices?
Bad.
All right. All right. So that's that. So let's move into I posted last night, right? This ASEAN move. It's since moved tracked lower. It said, hey, stochastic is in the sell zone. We got a swing high that formed, right? You can see how it pulled back to this weekly level at 95.49. And we close this candle today, you'll reconfirm that as a swing high there, right? So past support becoming future resistance. We've broken through this 93.52 level since. And then so posted it on the 4 hour chart, and we made a really nice U-turn, right? Inner trend line. Now we've got the outer trend line that's broken. So that's moving down pretty good. So we can see if it is sustaining momentum to the downside, right? Our momentum is slowing down sell side, right? So we may see correction here. But playing that Aussie and bearish, if we look at this 1 hour chart here, right? So while we've got that longer term move playing out on the 4, you can see on this C to D push on your 1 hour, you can see we've now hit an 80-20 zone, right? So a couple opportunities here, right? Potential 80-20 back to your 382 or higher, right? Or, okay, so this is how you play this. You say, hey, I like trading a 1 hour chart. There's an 80-20. I may look to play this counter trend, right? And so you may say, you know what? I think I want to buy it to the 382 because this is what my 1 hour chart is showing me, and this is the chart that I trade. Okay. Everybody follow me there? Yes? It's a beautiful thing.
Yes.
It's the game we play. All right. So you may say on my 1 hour chart, whereas it previously presented me with this ABCD move here, right? Oops. Right? It's ABCD move here. Boom. Made my money, right? We finally got a new AB boundary. Now it's an 80-20. I may counter trend trade that. Okay. Show you the difference in the thought process. If I'm short on this, okay, off this 4 hour chart, I know I've had this move to the downside has been quite sustained, right? Several red candles in that move. We know that it's not going to just move to this projected extension in one big wave. It could consolidate, it could pull back, it could do everything. So what I may do is hey, I love trading a 4-hour chart, but I may look to add to my position to the downside using my 1-hour chart, like so. So I may say I am long-term bearish based off my 4-hour chart that I like to trade, but when this trade pulls back to a 61.8 to my projected sell zone, I'll add to my short position. Okay, bang. So I'll look to add to my short position using my 1-hour chart and using the fib to pull back, and then I'll let it continue to fall. So now I'm stacking my positions in this 4-hour trade, right? So I'm accumulating more pips in the same move. Okay, so if we get that pullback, like so, oops. If we get that pullback, to readjust that. We get that pullback, then I'll add, and then we'll continue short. Okay, that might be my thought process. Okay, or you may say, I don't want to counter trend trade anything on my 1-hour chart. I like to trade 1-hour charts, but I don't want to counter trend trade. So what's the other option? Let it pull back and then short it. Right? Just like you would have done here. So hit my zone, short. Hits my zone, short. That's it. That's it. Makes the decision-making process easy. However you do it, stick to it, be consistent. So that's the Aussie yen. Okay. Euro Aussie. All right. Been watching this one. Hey, we came into this monthly level. Was in our AB boundary. Hey, I like trading 4-hour charts. I want to stay bullish. Did it hit your buy zone? The areas that we like to trade? Yes. Yes. Okay. Did we hit that 786? What is that? 170.82? What's the low here? 170.84? No. So our projected extension is still this 1.618. Right now, we are making higher highs, higher lows. Okay. If you trade cloud breakouts, you're waiting, right? You got a flat bearish cloud there. Let's see if we break out. But if we're just using, okay, our traditional setup, that's a long play for us. If this pushes lower and takes out my A, hey, lost 1%, 0.5%, whatever I'm risking. But, right, this is a Euro Aussie. We know that this moves, right, off that 61.8 level, right? It's 523 pips or so. Okay. Still a lot to gain, right? If you're playing the breakout, right? It's still over 400 pips there. Right? Our 1-hour chart. The break and the retest of the trend line. 61.8 pullback. That's our 1-hour projection. That's all we can do. Right? At least within this framework. That's all we can do. Okay. That's the Euro Aussie. Oh, want to check on this Swiss yen. This has been crazy and forever. We actually had two setups in one that occurred, right? So this is this longer term 4 hour that started to gain some momentum, right? We started to move up towards that 382, but look at this crazy pullback. So the question I'm wondering if this is going to hold, but look at this here, everybody. Look what happened as a result. Right? I didn't play. I was focused on that one at that 4 hour, but look what happened here, right? 80-20 as a result of that pullback. So completely missed that one. Right, that one happened pretty fast. But I'm wondering now if we hold in our zone and then we eventually get this 4 hour move to play out on that. But that's taking weeks, man. This is a crazy one. But I'm wondering if it can hold in our zone and then continue to push up, right? We started to get good momentum and then we pulled all the way back. We fell apart a bit, right? But we know S&B lowered the interest rate as expected. Swiss National Bank, right? So we saw a collapse. So we'll see if it can recover and move higher. But it did create an 80-20 on a 1 hour chart. So just wanted to show everybody that sometimes we have moves within the move, right? So that's the Swiss yen. The euro. Oh, here it is, CAD JPY. Can't remember. Oh, so this is our longer term 4. Let me zoom out. Okay. Longer term 4 hour. Look how long that move has been. All right. But we're still moving down towards that target, 99.77. But definitely look forward to sustain itself, right? You see how we got this swing high here forming? Definitely overbought. Okay. But we also have here on this 1 hour, right, coming off that high, potential for an 80-20 and a pullback at some point. Okay. So, that's a bit of a range. If you break out, top side, you can break back out. Okay. You may see, a good 80-20 opportunity there. Okay. Or wait for your high price. Okay. Same thing over and over again. Wait for your high price and then continue that short play off the 4. Okay. So that's the CAD yen. This euro NZD. So just want to take a look. This has been a little bit, a little bit back and forth, but the overall move on the daily, right, is still intact. Right. And so we've got a nice bullish candle here. Stochastic is oversold, right? So we're back in our buy zone. Let me mark this high here. Okay. So we had a good correction that occurred that kind of threw our fibs off on a lower time frame, but it's looking like it's starting to regain momentum. So even though it took out some A's on these other fibs, right, we could be continuing to move long now. So in order to catch that, we can move down to this 1 hour to see if we can catch a new fib running like so. We didn't get it here. So we may not with the momentum, right, get a correction. But if we hit that extension, then we can look for a pullback and a continuation. But just wanted to put everybody on alert for that one because I know in the lower time frames this has been going a little bit crazy back and forth, but it looks like we're starting to get that momentum going top side again on the Euro NZD. Then Euro USD, right? Let's see what happens today with what time is that report coming out? Unemployment claims 8:30. We know we've got we look at the DXY, right, as the exact opposite, right, where it's flipped the other way and it's kind of just moving sideways a bit, but we are up around that 118, 127 zone. So I'm wondering if we'll see a sustained correction to the downside. So I wanted to cover that one before we logged off, just because we've got that US data coming up today. And then tracking NVIDIA, right? Okay, we got a U-turn. Bit of a U-turn. We're back up above 113. Do we form a higher low here? We already have it. And then do we continue to get long? We posted, right? NVIDIA, that's big on U.S. chip making, a $500 billion move. In the U.S., they announced that the company will spend nearly $500 billion on U.S.-made chips and electronics over the next 4 years. This marks a major shift in semiconductor manufacturing as companies race to reduce reliance on China, right? And so NVIDIA stocks saw a pre-market boost after the news, potential pressure on Chinese tech as U.S. companies shift sourcing. This is a huge win for U.S. manufacturing, AI innovation, but rising costs and supply chain shifts could bring challenges. So the question is, will this help the U.S. regain chip dominance? That's the question on that. So this is where NVIDIA is right now. So if you're trading it or if you have it in your long-term portfolio, it's looking like it's trying to make that U-turn. And so pay close attention to that. Want to see what this looks like. See where we are with the cloud. All right, so we know we know anytime we get a deep retracement, we don't have a breakout yet, but I just wanted to see if it was starting to approach that cloud, and it is. Right, so we've got an A6 retracement there off this 4 hour, so we definitely won't be tracking it in the short term. So around 146. Okay, so let's see what happens there. Any questions over anything that we covered today? No? All right. Ryan, anything before we close out, sir?
No, sir. We got some things moving, man. We're moving into position. So continue to be patient and pick your spots.
All right. All right. Appreciate it, man. Well, that is it for this morning. I appreciate all of you being here, hanging in with us. Enjoy the rest of your day. We'll see you tomorrow, 6:30 a.m. Eastern Standard Time for the pre-New York session. Bye for now.